Hi, welcome to another video on this channel. Today we are going to discuss a mutual fund category called as international fund. As you know, the purpose of this channel is to explain the basic concepts of mutual fund investing, different categories of mutual funds, and various terminologies that are prevalent in the mutual fund investment space in a very easy and simple way. The target audience of this YouTube channel is people who are new to the world of investing, especially mutual fund investing. My name is Paresh. I'm an NISM certified and AMFI registered mutual fund advisor and distributor. This is my ARN number 334516. Before we move ahead, this disclaimer is highly important. Mutual fund investments are subject to market risks. You need to read all scheme related documents carefully. The past performance of any mutual fund is not necessarily indicative or guarantee of future performance of those schemes. So international mutual funds, as the name implies, are basically Indian mutual funds which invests in overseas equities. International equities, mostly countries like America, Canada, Japan, China, Brazil, some European countries. Uh, and why should you consider an international mutual fund, right? So basically, you're investing in international stocks. So the first reason is that you get an exposure to a wide array of sectors. There are certain industries which are either not available in India at all, or their exposure in the Indian stock markets is very limited. So these are some of the industries, right? So biotech. If you look at the sector's representation in Nifty 500, it's negligible. If you look at healthcare equipment, again negligible. Broadline retail, almost non-existent. Uh, Interactive media, very little. Tech hardware, almost non-existent. Software, yes, there is some representation, but it is nowhere close to nowhere compared to what is there in international equities. Semiconductors, we do not have any company. I'm talking about companies which are into the in the chip making industry, and we just do not have those companies here in India, and that's the probably the most lucrative growth industry currently. Chip making or semiconductors, you all must have heard the name of Nvidia and its meteoric rise over the last few years. So this is the biggest reason that you should invest in international stocks or international mutual funds, because these are some of the high growth industries of future, and these industries are just not available in Indian markets, or their representation is very limited. So if you think that these industries are going to grow in future, let's say for next 5 to 10 years, and they are going to grow exponentially, you have no option but to invest in international stocks or international mutual funds. Now, the index which you have taken here is MSCI ACWI index. What does that stand for? I mean, it's a very small technical detail, but I think it's fascinating to understand what that index is. So this is basically MSCI All Country World Index. Now, this is an index, right? So index, like we have a Sensex here, that is an index, consists of 30 stocks. We have Nifty here, which is another index which consists of 50 stocks, 50, right? So this is a all country world index which captures large and mid cap representation across developed markets and emerging markets countries. So basically, this index covers nearly 85% of the global investable equity opportunity set. So if you invest in this index, MSCI ACWI index, you automatically get exposure to nearly 85% of the listed companies in the world, right? Uh, very small but very fascinating detail. Another reason is that, despite strong returns which you have seen in the Indian stock market over the last, say, 15, 16 years, in terms of rank, right, the highest returns generated by a country, India has just twice been the best performing equity market among the top economies in the last 15 years, right? So yes, Indian market has given very strong returns over the last 15 years, especially over the last 5 years or so. But there are many other global economies or global countries whose stock markets have given far higher returns than India. In fact, if you look at the last 15 years, India has generated top returns across the world only twice. So US has been a consistent theme. If you look at the first row here, which is highlighted here, Germany has featured maybe once or twice, Brazil, China, uh, right? So basically, yes, there is no doubt that Indian stock market has performed well, and it might continue to perform well in future. Uh, I'm saying might because obviously there's no guarantee. But that doesn't mean that you should completely ignore international equities, because there are certain countries or certain stock markets in the world which have given far better return than India, and they also might continue to give far better returns in future. So you cannot really ignore that opportunity. And when we talk about international stocks, okay, we not we as in, but most of the mutual fund schemes which are available in India, which are investing in international stocks, a majority of those schemes or a major part of the AUM, assets under management of those schemes, is invested in the US market, for the simple reason that the US market is easily the world's most advanced and the deepest financial market. There is no other stock market in the world which offers the kind of opportunities and which offers the kind of depth that the US stock market offers, and it offers unmatched stability. This is a very interesting analysis which is done by McKinsey. It's a global consulting firm, right? And this was done for the period Jan 1996 to June 2022, right? What they found was that despite volatility, okay, and this includes, remember, this includes the COVID period where we're looking at June 2022. So despite volatility, various shocks, right? This period also includes the global financial crisis of 2007, 2008, the dot-com boom of 2001. But still, the US stock market has delivered an inflation-adjusted return of 6.8% over this period, 1996 to June 2022. And the second most important point is that this return is absolutely in line for what the market has offered over the past 200 years. Just realize the significance of it. This is what you mean by stability of returns, right? Despite all those advances in the world, despite all those technical innovations, despite all those geopolitical events, despite all those market crashes, various events that spread panic in the markets, the US market has delivered returns which are in line for the past 200 years average return. So this is a real return. This is adjusted for estimated inflation, means the actual return or the nominal return would be even higher than this, but they have adjusted it for the inflation, which means this is the real return that investors got after investing in US stock markets. This is what you mean by stability of returns, right? So in India, you must have heard that the returns which we got in the past, like people who have been investing in the stock market since 1990s. In one of the previous presentations I made on the importance of having a long-term orientation in mutual fund industry or as a mutual fund investor, we saw that the historical growth rate of the Bombay Stock Exchange, Sensex, over the last say 30-35 years has been around 14 to 14.5%, right? But that is for 30 years, and we keep hearing things that these returns may not continue in future. And obviously, the kind of growth that the Indian stock market has seen, the kind of liquidity that has come into the market might continue doing well in future, but those historical rate of returns might not continue. So the long-term historical rate of return for equity typically is assumed at 12%. But look at the US market. The market has been in existence for nearly 200 years, uh, and this is the past 200 years data. Uh, but it still delivers returns which are in line with its historical returns. This is what you mean by stability of returns, and this is one of the biggest reasons why investors all over the world flock to the US stock market, because no matter what is the geopolitical situation, no matter what the state of the economy is, they know that the US stock market offers stable returns over a long period, right? And I have said this a couple of times, right? When we talked about Peter Lynch's advice to mutual fund advisors, to mutual fund investors, there is a video on this YouTube channel about the same, and I've said this, that the US stock market is the most advanced and deepest financial market in the world. This is not a view, this is not my own opinion, this is a fact, and it is backed by data. Right? So look at better capitalization. So the NYSE and the Nasdaq together are nearly 50 trillion. This is a slightly dated data. I think that figure has now crossed nearly 60 trillion dollars USD. This is easily the deepest financial market in the world in terms of size, in terms of the kind of investors that are participating in the market, the kind of products which are available, not just mutual funds, but there are various other products which are available, ETF and many other specialized products. Uh, there's just more liquidity, right? So just to give you an example, Indian market cap is somewhere around 5 trillion, right? So the US market is almost 12 times India stock market size. There is more liquidity, there is greater diversification, right? So you can diversify your portfolio beyond stocks with US government bonds, corporate bonds, options, ETFs. There's something called as ADR, advanced deposit receipts. Uh, Market transparency. This is another key factor why the US stock market continues attracting, the attention and the flows of investors from all over the globe. The kind of regulation which you see in the stock markets, in the US stock markets, the SEC, right? We have SEBI in India, there is a Security and Exchange Commission, the SEC. The kind of regulation, the kind of disclosure norms, and the sheer amount of transparency that you see in the American stock markets, both from the listed companies as well as from the investor side, is unparalleled. Maybe a few decades ago, London Stock Exchange had this kind of depth, this kind of efficiency, but the American stock market, especially the NYSE, the New York Stock Exchange, has surpassed London Stock Exchange, and today it's easily the most advanced and the deepest financial market in the world. This is not an exaggeration, this is a fact. Another important factor is that lower currency risk. The shares which are traded in the American stock market are denominated in US dollars, and it's easily the most, or the safest currency in the world. It's called the safe haven currency. And innovation, of course, the kind of companies that are listed on the US stock exchanges, you will not find those kind of companies almost anywhere else in the world, barring a few examples, maybe a few which are listed in London Stock Exchange, or a few European stock exchanges. Uh, but other than that, companies like Nvidia, Amazon, Meta, Microsoft, these are companies which have generated tremendous amount of wealth for investors. They have created real impact, and if you want exposure to these kind of companies which are, leading, or at the forefront of innovation in their respective industries, there is no other market in the world which offers that kind of exposure. So this is a very good analysis by Bandhan Mutual Fund. So if you do, let's say, if you have 100 rupees to invest, uh, it is better to probably allocate 20% to US markets, because this is their study which they found that a combined India plus US portfolio in the ratio 80% India, 20% US, is more efficient, because the return, if you look at the right hand side, US stock market has delivered higher returns, although the standard deviation is slightly higher. So the blended return, 20% US plus 80% India, is around 20.4% 5 year, which is higher than India's a pure India portfolio, which is 19.2%. Right? And finally, this is what the great Warren Buffett said in his 2021 annual letter to Berkshire Hathaway shareholders. Despite some severe interruptions, our countries, he means the USA, he is an American, our country's economic progress has been breathtaking. Our unwavering conclusion: never bet against the United States of America. Remember, Warren Buffett is easily the greatest investor in the world. More than 65 years of experience of investing in stock markets all over the world, not just America, all over the world. He has invested in listed equities all over the world, and this is what the conclusion that he has arrived at after 65 years of experience, that there is no place like America when it comes to investing. So you should never bet against America. What does that mean? You cannot, as an investor, you cannot ignore exposure to US stocks in your portfolio. So let's look at how the international funds category has performed over the years. So these are some of the prominent, equity mutual fund categories. And let's look at equity international. 1 year return is of around 23%, 3 years annualized return 16.7, 5 years 10.6. Now remember, equity international is a very broad category. There are funds which are investing in European equities, in Japanese equities, in Chinese market, uh, and some funds which are like a well diversified geographical basket. uh, but most of the funds, even geographically diversified mutual funds, international mutual funds, invest a significant part of their assets in US stocks, because I mean that's just the market to be. If you really want to generate returns, if you really want exposure to high quality innovative companies, there is no other stock market in the world which gives you that kind of exposure. But remember, there are several restrictions on mutual funds which are investing in international markets, right? So SEBI and RBI have implemented several limits on international investments by Indian mutual funds. So there is an industry-wide limit. So US, there is a cap of 7 billion USD. So that is the total amount that Indian mutual funds can invest in overseas securities. There is an ETF specific limit. So there is an exchange traded fund. There is a separate cap of USD $1 billion for investments in international exchange traded funds. And then there is an AMC specific limit, that an individual cap of USD 1 billion for each AMC. AMC means a mutual fund company. So the total investments by a mutual fund company across all its schemes into international mutual funds cannot exceed uh, the cap of 1 billion USD. And just remember that most of the international schemes which are available or in India have reached those caps. So I think right now there are not any schemes which are taking any fresh, SIPs or lump sum investments. Uh, they open up from time to time depending on redemptions. If somebody has redeemed, if some investors redeem their investments, then obviously there is some gap where then they can probably take fresh money, and for that you have to keep following their email updates or social media pages. So this is actually a very lively topic on various social media channels, as well as online notice boards which deal with Indian mutual fund investments. People, the moment somebody realizes that a certain mutual fund has started accepting fresh investments, they will spread the news on social media. So you have to be online to really know when those kind of fresh subscriptions open up. So if you are planning to start your mutual fund journey, you can contact me on this number. My WhatsApp number is 975730929. I am a registered mutual fund advisor and distributor. I can definitely advise you in terms of choosing the right schemes for you based on your investment horizon, investment goal, and risk profile. On the right hand side, you can see your QR code. You can scan that QR code and download the Funds Bazaar app on your mobile. Start and start transacting online in mutual fund schemes by registering yourself on the app. If you're not comfortable using the app, there is a link given to the Funds Bazaar website on in the description of this video. You can click that link and go to the Funds Bazaar website and start investing in mutual funds. So this was a brief intro to the international mutual fund schemes available in India and why you should invest in them. Unfortunately, most of them are closed, but if you just keep an eye out on various social media channels or online discussion boards or the emails which are sent by various AMC companies, you will know when they open for fresh subscriptions, and you should capitalize on that opportunity if you are interested in investing, because those opportunities don't last long. Uh, so I hope you found this video insightful and informative. Do subscribe to this channel for more such introductory video on various mutual fund categories and schemes. Thank you.